The CEO of WPP, Martin Sorrell, joins me now live from New York. Mr. Sorrell, thanks very much indeed for joining us today. Having a look at these figures, your figures out today do show a real surge, a real rebound in ad sales in the US.
Yeah, well, two things, Andrea. Good morning or good afternoon. I'm not sure what it is. Anyway, two things really happened. Traditional advertising bounced back. And also the United States bounced back. So the surprise, the upside surprise, as they would say, was in those two areas. And what we saw was a return to more normal conditions. 2009 was what we describe as a brutal year, very tough year, where all sectors of the business, really all geographies, suffered. What we saw this year, or 2010, was that rebound. Part of it was a dead cat bounce, as we call it, because things were so tough in 2009. Advertising as a proportion of GMP in the United States reached levels that we hadn't seen since the mid-70s. So there had to be a rebound. There were some categories like autos, financial services, travel, retail that came back. There were some marketing wars that started in the automobile category, in the cola wars, the drink wars, in telecommunications. We saw a little bit of a feeling, I think, that online was about price and deal, whereas traditional media like your own, or certainly this part of your own, were more about branding and brand equity. And last, I think the most important point, in the West, growth has been tepid, and companies have got a lot of cash. They've got about $2 trillion, according to economists, sitting on their balance sheets, basically unlevered. And I think they've been very cautious post-Lehman with that. There's a bit of fear about, particularly in the West, and therefore they haven't increased fixed capacity and fixed expenses or taken on permanent labor. They've taken on temporary labor, and they've invested in brand, and that's where we've come in. The other part of the world, the BRICS and Next 11, were last into the recession and probably last out, but we have seen a bit of a surge. You used the word surge, and I think there was a genuine surge in Q4 of last year, and we saw BRICS and Next 11, Brazil, Russia, India, China, the Next 11 markets eclipse even the United States growth in the fourth quarter of 2010. So a little bit of a shift, and that will continue into 2011.
I'd like to talk to you more in a minute about emerging markets, but I was just interested that your share price didn't seem to do as well as we might have expected today. What do you put that down to, and does it concern you?
Well, I mean, certainly not one day's share price. Warren Buffett, not on your program, but on your competitor's program yesterday, said he can't determine what makes share prices. So I think it's had the stock has had a good run. He's interested in the long-term share price, like me, at 25 years as shareholder. So I think it's had a very good run against all the indices, against the competitors in the last year or so. And probably, there probably people were expecting even greater upside surprises. It was ahead of consensus. But there is an interesting point. We do give, not guidance, but we give our results almost on a monthly basis. We tell the market what we've done November. Obviously, they were waiting for December. So December was strong. It was a double-digit month, actually, and took like-for-like growth up from 4.9 to 5.3. But everybody knew we were going to do about 5%. So I don't think it came as a surprise. There's a lot of short money around, according to several people, and I think you do see volatility as funds move in and out of stock. But the more important reaction is what happens over the next few weeks and months. We started the year pretty well in January with an 8% rise in revenues. Our budgets are looking at 5% for the year, with this switch away a little bit from the US and Western Europe to BRICS and Next 11 and digital from traditional media. So we think it's set pretty fair for 2011, 2012. I think the bigger issue is what happens in 2013 when whoever's elected president will probably have to deal with a deficit if the bond markets haven't decided to advance matters.
I'd like to talk to you a little bit about digital. I think the last time we talked, you were talking about pushing it to making maybe a quarter, a third of your sales revenue. How far on are you with those plans?
Well, digital, in the figures we announced today, it's 29% of our 15 or $14.4 billion of revenue last year. because we're very close to that third objective that you mentioned, 1/3 of revenues coming from digital, we've decided to up the target to 35 to 40%. Faster growth markets, that's BRICS and Next 11, basically Asia, Latin America, Africa, the Middle East, Central Eastern Europe, are also at 27%. We've upped the target for that to 35 to 40% too. So we're trying to get both faster growth markets, geographical markets, and faster growth functional areas of digital up to about 35 to 40% of our business, as opposed to the third that it used to be.
And in terms of those emerging markets, China is still important for you. Also, the other BRICS countries that you talked about. How will you expand there? You've talked about some sort of mid-size acquisitions. Are you planning any more major ones?
Well, so we're basically focused in small and mid-sized. If we look at a market like China, where we have about this year we're sort of budgeting about $925 million of revenue. So it's almost $1 billion. We're getting close to the $1 billion mark, which we would like to get to. The bulk of that growth, if you look at our presentation, we worked out the compound average growth rates since 2000. So for the last 10 or 11 years, in China, in Russia, in Brazil, in India, they're all in the 15 to 20% range. And that's where we get the growth. We get the growth in organic growth. I mean, our biggest new business win in China was a $1 billion win in FMCG in China, $1 billion a year that's spent in China. That's where we'll get the growth. Acquisitions, the biggest acquisitions we can find in China are probably $5, $10, $15, $20 million, $25 million of revenue. They're on the small side. So it's organic growth. India, our business about 425 million. Brazil, it's about getting on for 600 million now, about 580 million. And in Russia, it's smaller, about 200 million. Market shares in Russia are probably about 25%, Brazil 25%, India 50%, and China about 15%. So we have very strong market positions. In all four markets, we're significantly ahead. So it's really organic growth that's going to drive it. We will make some smaller acquisitions, not even medium-sized ones, smaller acquisitions in each of those markets this year.
OK, Mr. Sorrell, thank you very much indeed for joining us today.
Pleasure. Thank you.